So there's some big figures across all markets this week that you should look out for. We'll start with the stock market, then we'll head into the bond market, and then we'll go into the oil markets so that you can follow along. First things first with the stock market is that Google already set the stage last week when they released their second quarter earnings, and it was seen that for the first time since they IPO'd, they had negative free cash flows. Now, this is a big deal because Google is a very profitable company. As actually, when you look at their Q2 report, the revenues and the profit figures actually beat expectation. The only thing that has changed is that Wall Street is no longer enthusiastic about AI capital spending. Google is poised to spend about $200 billion in 2026, and this is a huge problem because it's eaten up all of their free cash flow, and investors on Wall Street right now are more worried about return on investment than AI spending. So there's a little bit of nervousness with all of these companies that not just the tech companies, most of the companies that are listing right now, because a lot of the past few years they have been incentivized to invest in AI infrastructure and so on. But right now we're seeing the market ask the question, when will this be profitable more than how much you spent? And there's a little bit of nervousness. Beyond that, as investors, we'll also get to see how the economy, the US economy, is performing beyond what the government data says. Speaking about the government, the Fed is set to meet on Wednesday, and pretty much this is the FOMC meeting, Federal Open Markets Committee meeting, where they decide the rates, the interest rates for the next who knows how long, and they have pretty much remained unchanged, and investors expected them to remain unchanged, but there has been a few major changes over the last 1 to 2 weeks that have put a lot of pressure on both sides. The main thing is that the inflationary pressures in the US economy have really escalated, especially with the Middle East conflict and oil passing the $100 per barrel mark. So we've seen what's happening in the stock market, and we've also seen what's going to be happening in the bond market. Now let's go into the oil market. Now, I'm not an oil markets expert, but looking at this, I wanted to look at a different purview than everyone has been looking at. We've been sort of confused whether the Strait of Hormuz is open or closed, whether there has been attack by which side over which side. Well, you're not alone, and markets are also pricing this. Now, all of this volatility might actually seep into the stock market and the bond market because capital likes stability, business likes stability. And what this might do is that it might actually push rates higher. Higher rates mean higher costs, especially for companies like Google and the tech stocks that are building out their AI infrastructure.